Let's discuss support and resistance. Basically, support and resistance are really important to understand so you can understand chart patterns in order to trade properly, effectively. It's the basic building blocks of all kinds of different things relating to charts. So make sure you understand support and resistance. First off, let's talk about support. Support is basically a psychological level where a lot of people think that the demand is strong enough to be able to hold that stock price up, okay? So if you think of a price floor, price ceiling, this would be kind of a price floor, but it's not government controlled. So let's say we have a stock that's declining in price, and it comes here and it comes to this line, and this will be our support line. And this can be either a $50 mark, a $72 mark, a $100 mark. It just really depends on the stock price and the psychological level. And the stock, all of a sudden, the demand starts to get so much greater at this level because the price is very convincing. It's a good price for the stock, or it becomes very interesting at that level, so the stock will pop back up. Might go back up and come back down, and so on and so forth, and to where it goes further. So nobody knows, but what you want to see it do, a great healthy support line, is to hit multiple points at that same level. If it's hitting one here, one there, it's not necessarily great or healthy support. It's usually, you're going to see it supporting at one solid level. And that's basically what support is that the buyers are stepping in right here at this point because that price is getting so convincing, that demand is increasing, and the sellers, they don't want to sell it anymore because it's just so cheap enough. They don't want to push the stock down. So that's basically what support is. As for resistance, it's pretty much opposite of what support is. Let's say we have this resistance line right here. Okay, so this is our resistance line, and it's opposite of what support is. It's pushing that stock down. So what happens is you get a high enough level, it's thought to be that the price is so high that, you know, sellers start pushing it down. It just becomes not very convincing in order to buy that stock further. So what you can have is, let's say people are buying the stock. It comes to this point, and again, it can be, let's say, $150 mark. It can be, it doesn't have to be a round number. It can be something like an $83 price, okay? But it goes up in price here, it hits this line, and then it comes down. So basically now all those buyers get out of the way and sellers step in. So they say it's too high, I don't want it anymore. They start selling it. Then it might come back up and it hits it again, and then it might tumble back down. So you want to make sure that you understand what resistance is, because it's psychological level to where those sellers are pushing that stock down further. So you need to know when to exit. If the more times it's hitting that resistance line, the stronger it's becoming, the stronger that resistance is coming into play, and the more sellers are really pushing it down. So you want to watch for that, and that's basically what resistance is. It's opposite of support, and it's helping push that stock down on an incline in price. Here's a cool thing to understand about support and resistance, is that support is actually resistance and resistance is actually support. They both equal one another. Now let me show you how this works. Basically, let's say we have a stock that's starting out, and this at first is our resistance level, okay? The stock is coming up, it's bouncing off here, it's hitting it, it didn't go past, it's bouncing a second time, it's hitting it, it didn't go past, okay? Now, eventually, let's say that stock breaks through that level. Now, this resistance actually becomes support. Then we have a new level that it starts hitting. And this new level, let's say this first level was $25. This next new level is $50. And this will become our resistance line now. It starts coming up to $50, it's hitting it, and then it'll bounce off of our new support, which used to be our old resistance level. And the more times that it hit it, the stronger that line becomes. So if it's hitting that support or resistance line more and more often, that section is actually becoming stronger. That price level is becoming more concrete and more defined because a lot of people are buying or trading at those levels. And that's what happens, is it's all psychological based, is that the more trading that's done around those areas, the stronger those areas become. Now, if it did break through here, now this changed to our support line, and this is now our resistance line. And again, it can go back up and back down, bounce off that level, and then again go back to that next level. And now this becomes our support line, and this becomes our resistance line at maybe, let's say, $100. Okay, and it'll keep doing that over and over and over again. So another point to understand is that support becomes resistance and resistance can become support, and the same thing on the downward level. So again, if you're going on the downward level, you're going from here, this is our support, support, boom, then that would become our resistance now, okay? So it alternates and it goes back and forth, and you're just watching those price levels where it's hitting more and more times and on that line and plane. So draw your lines out, and that way you can find support and resistance. It's important to understand that support and resistance do not have to be perfectly horizontally straight. This one here I have is slightly elevated, and they can be mixed in just depending on the psychological level. It could be just the increase in the stock, demand, or whatever the price is. So let's say we have a stock price that's coming here and it's hitting this support level. Okay, then it goes back up, hits it again, goes back up, hits it again, but then it declines. Now it declines and hits this new support level. And again, we repeat that segment or trend, and it can go back down. And where it goes, nobody knows, but you're watching those key levels for those support and resistance. So understand that they can be elevated in different angles, and those would still be classified kind of as support or trend lines or resistance. Again, the same thing, they can be elevated. So keep an eye out for those, and they're just basically psychological levels. Now, if support or resistance is broken, let's say this was our support and it got broken, that basically means the perception of that stock was changed. So that means that the demand for it has changed. People want it less. So when stocks tank and go down a lot, people are dumping their shares. They're selling their shares and they want less of that stock. On the other hand, if stocks have a ton of resistance, let's say we have a stock that's here and it's hitting this resistance a whole bunch of times, but then it breaks through to that upside, past that resistance point, basically the demand again changed. People really wanted that stock for some reason, whether they got a new product that came out or some news event that came out, but whatever happened pushed that demand much further. So watch for those key levels in support and resistance so you know where those psychological levels are for your stock or when you're trading.